There's a list of frequently asked questions. What happens at the end of the term? So let's say we wrote a 1-year loan,
Right.
and the 1 year is up, and
Right.
we haven't been paid back yet, but we've been paid successfully for 12 months.
Right.
What would be the decisions that we could have?
Sure, probably 2 decisions on that. That might be somebody that's bought a house and with the intention to flip it. And 1 year in this business can go very quickly, especially maybe you're dealing with the situation where you needed a permit from the city, something was delayed, it took longer, property hasn't sold. So if it gets to that point, usually what we do is we'll go ahead and take a look at the value again, and then we'll go to the investor that's in it a lot, because the borrower is obviously okay to make payments until the house maybe sells. So the borrower will have the option just to continue on in that trust deed for another year. And if, let's say, they didn't want to do that, we always have the option of putting a new investor in that trust deed if somebody wanted to get out of it. I would say probably 99% of the investors, if you get payments from one person for a year on time, you're not necessarily anxious to give up that investment.
When we were, right now we're in a pretty mild space compared to where we were in, say, 06, 07 when values
Right.
decreased.
Yes.
So the worst case scenario is, let's say you've lent in 2005 and it's 2007, and all of a sudden 40% price drop, which probably we'll never see again, but we saw it then.
Right.
At that point, think through your own mind as a lender. You've now got a trustee that may be underwater and,
Right.
and be current. How would you handle that as the lender? What would you do in that situation?
Well, usually with our borrowers, sometimes you can do a workout in some way, maybe by lowering because we did solve many this way, so I'll just use this example.
Right. No, that's perfect.
At the time, interest rates on flips were 12.5%. Okay. Well, in a lot of cases, the borrowers came to us, and with the lender's help, we did situations where maybe they dropped the interest rate to 4% just to allow them to rent it out to maybe get through to a certain point in time.
Right.
And using my brother's house as a perfect example that he had, that was the exact example. Somebody had been making payments on it probably for 3 years. We ran into that time frame, and at the end of that time, if we would have tried to sell it, there probably would have been a loss.
Right.
But they negotiated a situation where they did, I think it was a 4% interest rate, and they held it for a couple more years, and then the client was able to get out of it, and then nobody lost principal. And if you look at that investment, it probably netted 6, 7, 8% over the 5 years, and that was in the Great Depression of real estate.
Right.
So there really usually are solutions if you have both sides willing to work.
I think that's why it's an important thing to bring up, is that the flexibility that we have is we're not Bank of America.
Right.
We're just a person that says, okay, what's in everybody's best interest here?
Right.
And almost always it's not, let's just foreclose. That's just honestly usually not the best solution, because most trustee investors don't really want the asset, they want it to cash flow.
Right.
And the person that we usually have lent to is probably as capable as anybody as to dealing with the problem. The problem might just be that 08 market where you're going to solve it any better by taking it back.
Exactly. And then I'm going to go through a second example, because this is something that could be in people's minds. On occasion, in that same time frame, you might have a borrower that truly can't deal with it.
Right.
Meaning he's reached a point where, for whatever reason, he's not your best option. Well, because we lend to so many people, we have people in almost every area that we lend to, multiple people.
Right.
So we were able to get some people, say, almost out of that trust deed into a new trust deed on the same property at a lower rate with somebody that was capable of handling the property.
Exactly.
So you've gone from somebody that can't handle the property to somebody that can handle the property, and then they're taking you out a different way. In some cases, lenders agreed to go amortized loans at a lower rate to gradually get their principal back, and that was great for an investor, because he might know in 10 years he's going to have a free and clear property, and conversely, the lender knows in 10 years they're going to get all their money back. So solutions really are out there if you have both sides willing to work.
How much money does somebody need to have get started in trust deed investing?
Typically, the lower end of our trust deeds for a person to do one trust deed is right around 100,000.
Okay.
So that would mean that net worth rule, you probably have to have a net worth of right around $1 million.
And where's our location? Do we ever go out of California would be one question.
Yeah, no, we stick to Southern California.
Okay.
We stick to areas we know. We stick to appraisers that we know. And that's one reason why we really haven't moved even further in California, because we're very comfortable with the areas that we know. And we know in some of the areas that it can be a big difference between this side of the street or that side of the street.
Yeah.
And you need to know that in every area you're in, and that's why we kind of stick with our area.
When I'm lending somebody, they're giving me a payment, and I'm happy, and then at the year end, they don't pay their property taxes.
Right.
So what kind of liability does that cause me as the lender?
Yeah, the liability for you in regard to the property taxes is if it's a flip property and they get to 1 year, you're aware of that. You could always bring it current, but the options are usually we'll contact the client and they'll resolve it. A lot of times it might be an escrow, they're waiting for it to sell. So the key issue with the taxes, if it gets where that 5-year mark,
Yeah.
that's where you could have an issue, because they actually could take it to tax sale.
Right.
So, a year or so, you're really not in any jeopardy. Some clients, this is going back into, like, say, we're talking about, the Great Depression of real estate. Even some clients that, say, didn't have the ability to, say, pay all the taxes and bring them current, that were in bad situations, you can go to the the county, and you can actually get on tax payment plans. And what that does is it prevents them from being in a situation where they could lose the property because of taxes.
As a lender, I can write a check to solve the problem.
Yes.
And then that would be added to the amount I'm owed, correct?
Yeah, that would be added on back to your principal,
Okay.
yes.
At that point, you might have a discussion about, can we not let that happen again, or can I get my money back, or
Right.
something like that. But
Right.
it's solvable, and it's probably easier solved after 1 year than waiting for 4.
Absolutely.
Okay.
Because you got penalties and interest, which just make the number much bigger.
If someone's interested in investing in trust deeds, what would be the step they take now?
Well, they can just call the office, I guess.
Okay.
That's what I do. I'm at the office all the time, and I talk to people and just kind of try to give them an idea how we're doing it. If they're close to Riverside or they want to drive out there, they're more than welcome to come in and meet us.
And they go to the website, the
Yeah,
norrisgroup.com, and there's just a wealth of information on not only real estate investing, but trust deed investing and the process of being able to fill out an application for loans and things like that.
Yeah, our website, we just get comments all the time. There's so much free information on our website. It probably rivals anything that people pay for.
Yeah. Well, Craig, thanks for joining us.
Yeah, thank you.